This session focuses on the grand opening and post-opening phase, specifically the protocol for establishing the daily revenue report. Traditionally, businesses rely on month-end accounting reports to review performance and reconcile their financial standing. However, a 30-day reporting cycle is too slow for the operational phase of a hotel, where inventory and guest demand fluctuate hourly. Waiting until the end of the month to identify a drop in F&B margins or a spike in labor costs means the opportunity to recover those funds has already passed. Hotel inventory resets every 24 hours, and this requires a fast management cycle that precisely mirrors this daily turnover. Here, the GM and department heads require financial intelligence that is both immediate and actionable. This requires the finance department to move beyond static monthly statements and commit to a high-frequency daily data pipeline. This frequency allows precise adjustments to daily pricing strategies, employee payroll schedules, and real-time department purchasing. This pipeline is built on two distinct tools, the Daily Revenue Report, or DRR, and the Flash Report. By replacing month-end reporting with daily snapshots, the hotel can identify and resolve operational inefficiencies before they impact the monthly bottom line. The Daily Revenue Report is the foundational, retrospective document for the hotel's finance department. It is produced every morning by the night audit team to summarize the business day that just concluded. To ensure consistency, the Director of Finance establishes a strict standard operating procedure that dictates every mandatory data point the report must contain. This begins with key performance indicators, or KPIs. These include the baseline metrics of average daily rate and occupancy percentage. It also tracks revenue per available room, which provides a snapshot of how efficiently the property's rooms are being sold. The DOR also requires total revenue per available room, or RevPAR, to capture guest spending across all revenue centers. Finally, the KPI module provides a departmental breakdown, separating revenue from rooms, food and beverage, and other ancillary services. Department heads use these summaries to verify that their results from the previous day align with their budget and labor spend. Without these specific daily KPIs, operational leaders lack the objective data needed to measure their department's performance against its targets. Beyond tracking revenue generation, the DOR is used to monitor revenue capture and physical financial security. This is managed through the payment and receivable summary, which breaks down how the previous day's revenue was actually collected. It records all physical cash drops made by the various departments. It also summarizes the credit card batches that were settled during the night audit. Finally, it details the net movement in the accounts receivable city ledger. This summary provides the Director of Finance with a daily view of liquid cash flow and any emerging credit risks in the ledger. The third mandatory section of the DRR is the source of business and market segment analysis, visualized here as a breakdown of total revenue. This data maps every dollar of revenue to the specific market segments defined during the hotel's configuration. The sales team uses this analysis to immediately determine which promotional strategies and pricing tiers are currently attracting guests. This makes the DRR a daily diagnostic tool for both financial integrity and sales strategy. While the DRR documents the past, management also needs a tool that anticipates the immediate future. That tool is the Flash Report. To be effective, it must be produced and distributed early in the morning, typically before 9 a.m. Unlike the DRR, the Flash Report is a prospective estimate of today's expected performance and the trajectory for the next few days. The early deadline ensures that the general manager can adjust staffing and services before the peak operational hours of the day. The accuracy of these estimates depends on a strict methodology for extracting data from two primary systems. First, data flows from the Property Management System, or PMS. The PMS provides the expected occupancy and room revenue figures based on the current reservation manifest. Second, the report pulls data from the Human Resources Information System, or HRIS. By pulling the scheduled roster from the HRIS, the Flash Report can provide an estimate of the day's payroll costs before the shifts even begin. This allows management to see today's likely financial outcome while there is still time to influence the result. The dual reporting framework creates a complete picture. The DRR records the unchangeable facts of yesterday, while the Flash Report estimates the alterable events of today. Together, these reports provide the primary data stream coordinating three operational pillars: pricing, payroll, and purchasing. This enables tactical pricing adjustments, responding to last night's pickup. It drives labor optimization by adjusting shift hours to match occupancy forecasts. Finally, it ensures precise purchasing, aligning orders with expected guest volume. This structured reporting rhythm replaces the ad hoc financial checks that characterize a hotel's pre-opening phase. Transitioning to this data-driven cycle is a significant milestone in a hotel's operational maturity. This specific level of financial rigor is a core component of the data analytics curriculum at the Europe Hotel School, London. By implementing these reports, the hotel establishes a company-wide discipline of daily financial awareness. Mastering this cycle of high-frequency intelligence allows management to move from reacting to yesterday's issues to proactively managing today's performance.